So let's talk about some of the data itself, because I think you want to see like, okay, well, Spencer, you told me all of these market updates over the last few weeks. That's great. It's been very insightful. But what has happened when it comes to real estate actually in the Bay Area? Like, how has it been impacted? Are we buying a 50% discount right now? Is everything a fire sale? What is happening? Well, let's take a look, right? This is the MLS. I'm not hiding anything. Santa Clara County, all properties, right? So let's take a look at the trends, right? Right now we're into June 18th, which we're halfway into June. So take a look at prices. The highest was back in April at 1.61. You can see in March it declined just by 10,000, so it's not by much. So that's less than 1% to 1.6, and then now it's at 155. So that's a 60K. That's about a 3% decline, right? 3% decline since the highest points of April. And so this is also just something people need to be familiar with. Like, we're not talking about we're not talking about some massive correction. Sorry, actually, I think it's like 4 or 5%. We're not talking about like a massive correction that you're not buying things at a 20% discount. We are buying things at a discount for sure. No doubt about that. But the levels is also important for people to understand. Okay, if they're going to be making an aggressive offer, still got to be within reason, right? I mean, we don't need to go 20% off because that may not be realistic. But you can see you can obviously have discounts already in place. So let's take a look at a couple of things that I want to share with you. Active number of listings. So you can see the difference, right? This is the active number. How many are on the market? You can see just how many there are. In this month alone, there's been more than there has ever been on the market all year. Let's take this back. So let's take a look at perspective. So active number of homes, right? So I think it's also important, as you can see. So let's look at the data. This might be more helpful. Sorry. We're going to look at the last 12 months. We're just going to use that data point because it's gone. So 1976, right? Because June is not over yet. That's the difference. 1976. So if we look at the chart, like when else was it 1976? So you can see it was end of 2020. So it looks like October 2020, right? So as you can see where the level's at, we went from a really record low amount of inventory from the absolute crazy hot times that we had before to now the levels of where we were at back in during kind of in the Bay Area, especially during that time when COVID was still a major factor of people's decisions. There's a lot of uncertainty with offices. That's when we're back to at this moment, the end of 2020. Let's just look at the last 5 years so you get perspective too. So as you can see, there are many times that are much worse than we were at now, right? You can look at even June 2019. That was the most, 2,649. We aren't at that levels yet, so we're not at the worst it has been. And at that time, things didn't completely melt down entirely either. So there's something to have perspective in terms of the amount of active inventories. Let's take a look at the number of new listings. Let's shrink this. So you can see the June figures, right? June figures, number of new listings, we're at 1266. So let's compare this to like last year. So June 20, so there's over 2,000, almost 2,100 homes of last year. This is new listings. How many are coming on the market? Right now we're at 12 something, right? So I would say, given we're already midway through the month, I suspect it will slow down. And you can see some of it has slowed down already in the last few months, right? April had less new listings than last year. May had a little bit less new listings than last year, but you can see how many were still coming on the market each month. So you can see that like last year was still a very busy time throughout the summer in terms of new listings. The other thing that you want to take a look at is the days to sell. Like, how long does it take homes to sell? You can see, let's do 12 months here again. You can see the average days to sell, the median time is still 9 days. So you may be asking yourself, how is that the case? Right? Like, why does it only take still 9 days? I thought nobody was buying. Didn't you think that? Didn't you think no one was buying a home? Wait, but no one's buying. So how is the average to sell is only 9 days still? And if you look at the entire year of even last year, does that not seem quick? What do you think of that? Leave it in the comments below. Why do you think that's the case? Right? Why is it only 8-9 days? And this was all of last year too. Was about this, right? So why is that? So there's a few reasons actually. So when you actually, if you actually open that up and understand why that's the case, what it actually is the case right now is there's a classification of categories of homes. That's the difference now. So how is there more inventory than we've had all year, but why is the average days to sell still low, like still like 9 days? The reason actually is actually very simple. You should think of it as three types of really actually you can almost look at it two types of categories, more three types of categories. The houses that are very nice, that are remodeled, that are in good, that are positioned well, that are not overpriced, as you can see, still sell very quickly. Do not be surprised; they still sell within 1 or 2 weeks. Nothing has changed on those types of houses. In the past, when we had very low available options for individuals, people would also be willing to buy those fixers or those homes that require a lot of updates and upgrades that are needed. So they would also take those too. And then you get suppressed options. But now, this is the metric of days to sell. So it's by days to sell, it's those that are actually transacting. And so those are the good properties still transact very fast. Good properties are not just waiting there still. We're not in that market. But the difference is those that are not, those may be there for a long while. They may be sitting on the market long. They may not even sell, right? And that's the difference that is happening right now is why is the days to sell still so short? It's just segmented. But if you ever go and look at an open house or go with me and we see good property and it's a good property, they still will move fast and they will still have a few offers. Nothing crazy, to be fair. We're not talking about anything crazy because let's take a look at the price to sale ratio. Nothing crazy, but it will still move very quickly. So let's take a look at this. Sales to original price ratio. I think this is a good metric for you to also have. Past 12 months. So you can see the price to sale ratio is still, as you can see, it's still above the list price typically, but it has shrank quite a bit, especially versus what we have seen for the year. So this is shrinking, but you can still see like it's still higher than what people are listing it at because many reasons. Many are just listing it low on purpose. That's important to understand because you see the stats itself. The stats from sold price are declining. So this means if it's still 107%, that means they're listing it, as you can see, 12% below on purpose of what it will go for. So do not be tricked by that and do not say that you only want to buy a house because you want to buy it for 5% below their list price. That's not the measurement to have, right? So keep in mind of this. Like if you just saw it yourself, prices have declined by 4 or 5% versus the high time. But if you see this, sell price to original price ratio is still over that, 107%. So do the delta. That means typically they're listing it by 7% plus the 4 or 5% by 12% below what they think those good properties will go for. So have that as part of your general equation. Of course, every home is going to be case by case, but those are some measurements that are important. I think that's about it that I want to cover. I shared about the active amount of inventory. So we took a look at the months of inventory. You're going to see this increase. It just makes sense. So you can see we're at 2.6 months of inventory. This is the highest, as you can see, that it has been. What does month of inventory mean, just so you know? It simply just means this is how long it will take for the entire wave. If no new listings come on the market, how long it will take for the entire wave to be depleted. And so where does 2.6 lie? Back to, in this case, of May of 2020, which was a very, very scary time, right? So the months of inventory that we see are at that level. They're also at some of the levels that we had in 2019. What happened in early 2019? The Fed also increased their interest rates very aggressively, but there wasn't anything crazy in terms of like massive recession or anything like that. But we did have a mild recession during that time as the Fed increased their rates very aggressively at that stage. But this time, as you can see, the levels are what they were back in May, and it may increase further to to some of the highest it has been over the last couple of years. Thank you for watching this short on my YouTube channel. For more shorts, go ahead and click here. For more live streams, you can go ahead and click here. I'll see you in the next one.